Welcome. We're happy you're here. This presentation will inform you of the function of the benefits plans we provide and that you have the opportunity to enroll in for the upcoming year. A health savings account, or HSA, is an individually owned savings account used to store money for qualified health expenses. And because it's individually owned, you keep the account no matter where you go. Like a normal savings account, a fraction of your paycheck can be put into your HSA every month. Your employer may even make contributions as well. In addition to pre-tax contributions, you can also make post-tax contributions directly to your account. The main benefit of an HSA is that every time you make a contribution from your paycheck, there are no taxes taken out. The benefit of this action is twofold. First, the extra money that would have gone to taxes can be used on health expenses. Second, when your HSA dollars are taken out of your paycheck, it lowers your taxable income. This means the same tax percentage is applied to a smaller amount, and you keep more of your money. A stipulation for this account is that the funds can only be used for eligible healthcare expenses. The Internal Revenue Service, or IRS, has a list of what items and services are deemed eligible. The IRS does not require substantiation for an HSA. Therefore, as your administrator, we won't ask for receipts or documentation. However, we do advise participants to keep receipts in the unlikely event of an IRS audit. There is no use it or lose it rule that applies to similar benefit options. HSA funds don't expire and will remain in your account until the funds are spent. You can save your funds year after year or spend them on eligible expenses at any point in time. Your HSA funds are yours to keep, even if you change employers or health plans. If your HSA still has funds in it when you're age 65 or older, the funds can be spent on anything. However, you will need to pay taxes on anything that's not eligible healthcare expenses. It may be tempting to spend the money as soon as you contribute it, but it is a health savings account. When possible, saving your funds while you're healthy can help to tackle large unexpected healthcare bills down the road. Regular additions from your paycheck are a fine way to build up the funds in your HSA. But there's a way for your funds to grow themselves. Just like a 401k, your saved funds can grow with the benefit of tax-free interest and dividends. HSAs are an efficient way you can pay for your qualified medical expenses while growing itself through mutual fund investments. To recap, an HSA is an individually owned account where you save tax-deductible contributions, use the funds tax-free on qualified healthcare expenses, and grow the funds using a tax-free accumulation of interest and dividends. What better way to save for your future than with a fund that has triple tax savings? To have an HSA, you must already be covered by a high-deductible health plan, known as an HDHP. If you move to another high-deductible health plan, you can continue to contribute to your HSA. If you happen to transition out of a high-deductible health plan, the HSA and its funds are yours to spend down, but you won't be able to contribute to it anymore. If you have the option to enroll in both a medical FSA and an HSA, you can't enroll in both. However, if your employer offers a limited medical FSA, post-deductible FSA, or a dependent care FSA, you may enroll in both. These are designed to work in conjunction with an HSA. Like other benefit plans, there are limits to how much you can contribute to an HSA every year. These are the HSA contribution limits for this tax year for a single person or a family. If you happen to be over the age of 55, the contribution limit is increased to help catch up for anticipated medical expenses into retirement and beyond. Here is this year's catch-up limit. These numbers typically change yearly, so keep a close eye out for next year's. After you've enrolled in one of our benefits plans, you'll receive an email confirming your enrollment. Accessing your online account gives you control over all of your benefits. You can view your balance, payment history, claim activity, update your profile information, upload receipts, and much more. After you've enrolled in one of our benefits plans that supports the use of a payment card, your card will arrive in your home mailbox within a couple of weeks. This payment card is the key to accessing your benefits funds. If you ever need another card for a spouse or dependent, or if you just need a replacement card, they can be ordered in your online account. Your debit card is connected to all of your plans if supported by your plan design and pulls funds from the appropriate plan depending on the purchase. If you have a medical flexible spending account and a dependent care flexible spending account, and swipe your card at a pharmacy for some bandages, the card will know to withdraw funds from your medical FSA automatically. Using your HSA funds is easy. You can use your payment card or request a distribution to reimburse you or pay a provider. When you enroll in an HSA, you also get access to helpful tools that can guide you in your journey to financial wellness. Your online account gives you access to an investment guidance tool to help take financial planning into your own hands. This tool can provide recommendations for HSA investments, teach you about your investment options, help determine your healthcare needs after retirement, and much more. Thanks for watching this enrollment presentation. We hope you found this information helpful in making your enrollment decisions.